Thanks, everybody. Thanks for staying on. As Patrick Woodham from the CMI is going to be sharing this session with me, so he'll be joining us in a minute. But well done for staying on for this last session. Patrick alluded to earlier, it's slightly worrying when you are the last presenter of the day as to whether any content will be left to cover with you. But I am encouraged by the fact that I do have some fresh insight to share with you. So that just goes to show what a huge topic gender pay is and how much there is to say about this very prevalent topic. So you might have seen the Curo bird, Evie, on the screens downstairs. So just to explain, first of all, who Curo are and why we're interested in gender pay and why we're involved in this event. So we're an HR technology company, but we specialise in compensation management solutions. So we've been working for over 8 years with many companies, helping them to manage their compensation and reward processes. And for us, one of our sort of key elements of our value has been around pay transparency, because we know when it comes to engagement and pay specifically, that the perception of fairness is a really important part of that proposition. So when you look at why people leave companies for reasons relating to pay, it's not over the absolute value they've been paid, it's whether they perceive they've been paid fairly or not. So pay transparency has really been an important part of our company from when we founded it back in 2008. And many of the clients that we work with asked us over the last sort of 18 months if we could help them with their GPG reporting. But the core data that we traditionally hold for our clients in our enterprise product was not the same set of data that was required for the gender pay gap reporting. And those of you who have done the reporting will know that that's data buried deep within your payroll solutions or your benefit providers that you need to get hold of. So in response, we decided to build our own solution that could help companies comply with the legislation. So we brought to the market CuroGPG.com, and it is a self-service product. And really when we designed it, especially for the first year's reporting, it was very much geared at smaller companies who potentially wouldn't have the resources or the money to be able to do the reporting. It's fine if you're a large company, you can go outside, you can pay an expensive external advisor to help you with this. But if you actually look at the statistics, half of those 10,000 companies are actually under 500 employees. So it was then we were really trying to help with this solution when we first brought it to market. Now we've gone into year 2. And actually what we're seeing is larger companies coming onto the platform because they paid a lot of money in the first year or they went externally for advice because of the reputational risk involved in year 1 reporting. But now they want to move to a position of self-sufficiency. So they've done the hard work last year. They've done the analysis of, from their payroll, what falls into ordinary pay and what falls into bonus pay. And now they just really want a solution that they can manage themselves and own themselves on a going forward basis. And one of the aspects of our solution is that we allow you to upload as many data sets as you want to during the year. So you upload obviously a data set that's formed around the snapshot dates, depending on whether you're a private or public company. But we also encourage you to upload data sets through the year so that you can also try and track progress through the year on the solution. And interestingly, this sort of year 2, another request that I've had come in is around support on global reporting. So many of you have done reporting, you've taken that to your executive board or your senior execs in your global companies, and they said, okay, right, if we're doing all this in the UK, should we be thinking about this elsewhere as well? And particularly, there's obviously a huge drive in the US on equal pay, but they don't have, gender pay gap reporting. So we're also looking in our solution at the moment about how we can work with some of our early adopter clients and build a global reporting solution as well for gender pay, because it will help those global organisations to drive a diversity agenda multinationally and across all the jurisdictions within which they operate. So that's why we're interested in gender pay. So in this session, I'm just going to go through a few of the highs and lows around the reporting, both the metrics and the narrative. So just share some examples with you and then leave you with some practical tips on things to think about, particularly from a reward perspective for your 2018 reporting. And then if Patrick comes back from wherever he disappeared to. He is going to take over from me, and he's going to continue to talk about that brilliant study that the CMI did called Broken Windows. So some of this we've seen already. I will just point out, if in any doubt, this information is very easily accessible. So if you haven't been onto the Gender Pay Gap viewing service, there's that little button there, download or Gender Pay Gap. And that's the data that we're using, and I know Ines is using, to provide benchmarking information to our clients. But it is very easily accessible. So don't think you can hide, because any of your employees can also go on here and see the figures that you have uploaded and reported. But in terms of what happened in 2017-18, what did we see? So we've seen some of this reported already. It was, in the end, a surprising number of companies that actually reported, to over 10,500. There was that rush to the finish line. So I think it's about 1,000 people reported on the last day. And the main issue for those companies, I think we mentioned it earlier, is they've now had no time in order to take any corrective action because we've already passed the snapshot date for the 2018-19 reporting period. We know that there were 1,500 odd companies who failed to report, and we've heard about the action that the HRC are taking to address that. There was a lot of statistically implausible data, so Ines mentioned this earlier in his session. The point that I picked up was that there were 61 companies who had a mean and median of 0%, which is highly unlikely. And again, we've heard about that probably is likely to be the focus of the HRC in the coming months on those people that may have data that seems to be inaccurate. There was some positive news in there. There were at least 271 companies reported who fell below the 250 threshold. So they weren't obliged legally to report, but in a positive step, they did choose to report their numbers. And it was 152. I know it's more than that now. It was 152 when I produced these slides. But a number of people have already reported and uploaded their numbers to that site for the 2018-19 period. And significantly, of those 10,500 companies that reported by the deadline, 2,722 didn't include a link to a narrative. So if you've been on the site, you'll know you're meant to include a link to a narrative, which will hopefully then go through to your company website, and there'll be a nice PDF version of a report that's contextualizing your numbers and explaining your action plan. So 25% of companies or entities that reported didn't include any form of narrative. Well, I'm not going to dwell on this because we have seen this so far, but we know across that data set, the mean gap was hourly pay gap was 14.3% and the median 11.8%. So only 12% of companies, 12 or 14% of companies had a pay gap in favour of women. So if you're a woman working in the UK now, you're more than likely to be working for a company that pays men more than women on average. And I've got the sector comparisons up there as well. I think the interesting point for me from that diagram is that no company had a pay gap no sector, had a pay gap in favour of women. And that's going to be something that will be interesting to track over time. And then, as we've seen already, bonus data, 7.8% for the mean and 20.4% in favour of women for the mean. But still 63% of companies paying with a bonus gap in favour of men, even though the number of men and women receiving bonuses was relatively equal at 34% and 35%. And we know, we've heard discussed today, there are issues particularly around how you're being asked to report bonuses under the legislation. For me, one of the compelling factors that's missing is around eligibility. So we're not, highlighting whether a man or woman was eligible. We're just counting whether they got a bonus. So we are missing a part of that data set. And then we've got the pay quartile information that, again, we've seen today. Another funny quirk in the data set of the reporting companies. There were 5 companies reported saying they had no women working for them. But 2 of those companies, the signatory on the report was a female HR manager. So I don't know how they managed that. Maybe she wasn't an employee of the company. But so lots of quirks in the data online that you can, if you're really interested, go and try and investigate. Okay, so talked about the numbers. Let's look at some of the narratives, what was good and what was bad. There were probably the most commonly referenced phrase in the narratives was this one: we pay equally, but we have more men at senior levels than women. Full stop. And then a lot of reports actually just stopped there, as if to say, well, that's okay, that's just the way it is. But if you are doing that, you really are closing the door on diversity. Another common phrase we saw was, we are confident that our GPG is not a pay issue. Again, I think I would challenge all of you to really look in detail across all your pay policies, and you would probably be hard-pressed to say that there is not some form of discrimination going on in what you pay, whether it be allowances, whether it be benefits, within your organisations. Our pay gap is not a sign of discrimination because it shows differences in average pay. Well, I think if you have a pay gap, it is a flag for discrimination. So again, those may not be wholly pay-related issues, but there are non-pay-related issues, the type of things that Patrick is going to come on and talk about after me. And then a couple of more concerning justifications. Our gender balance matches those applying, and we cannot take action due to the limited pay increase budgets that we have. Well, they're honest, at least they're honest, but they're not really going to appease those working for their organisation to show that they're committed to gender parity. So, we've talked a lot about the reputational risk of publishing the numbers, but you really do have to think about the reputational risk of your narratives as well. I think another one, one of the football clubs, it obviously had quite, extreme numbers in favour of men, because all the highly paid players are male players, and the bonus gap was very large, and they basically just said because male footballers are paid more, and that was all it said in their narrative. So there was no further explanation. That's just the way it's always going to be. So if you're a woman footballer or your daughter is aiming to be a woman footballer, poor her, basically. So the best narratives were clear and succinct so that so your employees who can easily understand it, they explained that difference between the equal pay issue, and they explained the difference between gender pay. And they were honest and authentic. And this point of authenticity is probably one of the most important things for me. Don't try and hide the bad news. There was a lot of bad practice. I'm going to give you a couple of examples in a minute. But, if you're not honest about addressing where your issues are, then you can't really build an honest action plan, and you can't deliver on that. So I think, yes, there was a lot of fear last year about what would happen when we published our numbers. But this year in 2018, I would encourage you to really be as authentic as you can in your reporting. And really think about going beyond the figures, so just the headline figures, drilling down into, exactly, the explained and the unexplained causes of your gender pay gap. And then, embracing the need for change and setting out clear goals. We talked about targets downstairs. I think that's a really interesting discussion. I've had that asked me quite a lot by people that we're working with, should we be setting targets? So that was a really pertinent discussion that we had downstairs. So some examples, I've just got 4 quick examples. So TUI Group. So a lot of companies, some of you may be a group company with a number of legal entities that you had to report. Some of the narratives that I looked at did have multiple entities, and even though 2 of them had gender pay gaps over 60%, when I went to their narrative, they only had a 15% pay gap. There was no explanation to their employees, no mention anywhere of the fact that 2 legal entities had a pay gap. There was over 50% and 2 had a pay gap that was sort of under 2%. And so that blended number was the only number they chose to communicate. So TUI was a good example, in case anyone from TUI is watching online. You were a good example, because if you go to their narrative, they were very open in the way they reported. They showed the numbers across the 3 entities that make up their group. And obviously one of them being an airways, and we know the issues associated with that and the lack of female pilots. But they were very open and transparent. They showed, the big pay gaps there. They could have blended that number, and that could have been what they headlined within their report, but they didn't. They chose to be honest and open, about that reporting. Sometimes it is about pay. Now, Hugo Boss, an interesting example, because we know they were one of the firms that had a few attempts at getting their numbers right. But if you read their narrative, I thought it was quite a good narrative now. And a couple of points that I've picked up is where they were really trying to drill down into where there were real pay issues. And two areas I would encourage you all to look at is around incentive pay and around eligibility. So they found in their commission schemes, when they looked at who were their top earners in their commission schemes, they were all men. Why were they all men? Because they sold men's suits, and they sell more men's suits than they sell women's wear. So therefore, if you were a man selling men's suits, you stood more chance of earning more money. And they saw that as an issue to do with gender bias. And then similarly, they had 43% of their female employees who worked part-time in their stores in entry-level roles, and they weren't eligible for commission compared to their full-time colleagues. And of course, there are more women working part-time, and therefore, you have another example of indiscrete bias being built into your pay program. So that's why I'd really encourage you or challenge you to look, at what some of the specific pay issues that are going on. Other good narratives had a real strong call to action. And I particularly like the TSB report because they went one step further, and they gave a call to action to all companies. And three really compelling statements there about businesses must come clean on the reasons for their gender pay gap. Businesses must act to address the causes of their gender pay gap, and businesses must be held to account. Three really important principles that I would encourage you all to think about in terms of, setting your agenda for this year. And, talking to a lot of our clients, they're all planning to do their reporting in the June-July period. So they're going to do the numbers, and then they're going to spend this, a longer period this year sort of looking at their action plans, looking at what they're committing to, and then we'll choose to publish later this year, and trying to address some of these issues. And the last example I'm going to give from a narrative is around recognising it's a journey, and this has been mentioned today. Year two, you are going to have to share last year's numbers and this year's numbers. So part of the legislation is that you have to have 3 years' numbers, on your website. So you're going to need to start thinking about what story you're going to tell about that. Weetabix is a good example. They chose to publicly report their numbers last year as well, so 1 year ahead. So they were able to show 2 years. Interesting if they had gone the other way, whether they would have chosen to publish that in their annual report. But, they're showing a journey, and they're trying to explain the difference in the year-over-year figures. And they even went one step further. They've talked about their journey back from 2013, where they started to introduce pay grades and pay levelling, all done in their nice branding. So I think that's something to think about in terms of your messaging that you take back to the workplace, is how are we going to represent our journey, because we'll also be judged on our journey and our progression. So as we go into 2018 reporting, I'm just going to leave you with a few tips. Do the reporting early, so that you've got time to get some actions in, so that even if you did it late last year, you can start to see some action when you get to the third year of reporting. Ensure consistency in reporting. So I know a lot of people brought in expertise. They brought in some spreadsheet ninja to come in and do the numbers for them, and that person may have left. If you're going to be comparing year-on-year data, you're going to need to make sure there's some consistency in that. And that's why some people are choosing to use our platform, because they are using the same reporting methodology year over year. You also need to think about the same incumbent data set. I think that was mentioned downstairs earlier. So you might want to do 2 sets of analysis, one on same incumbent data set and one on your actual workforce that you're required to report under the legislation, and include that explanation, explain the reasons that might have impacted that. So that may be a key member of the board that was a female has left. It may be some corporate restructuring that's happened within your organisation. But be aware of that change in incumbent data set. Some people I know have chosen to change bonus payment dates, slightly controversial, but to help manipulate the skewing factor of the bonus that's been included in the ordinary pay snapshot. And I know, some people that we've worked with have chosen to do that. For some of you, you may expect the numbers to get worse before they get better, but it's important that you understand why. Some of the larger accountancy firms who signed up to the Think Act Now initiative, they've been on this journey for 3 or 4 years, and in their second year, many of them went out and recruited a lot more females into junior roles to feed their talent pipeline. And that obviously meant the second year of reporting, their numbers actually got worse. Now they're trying a different strategy. They're tending to go out and recruit senior women in order to balance their numbers. I wouldn't necessarily expect the numbers necessarily to go in one direction, and don't be shocked if they don't. But I think the important thing is to demonstrate progress on your actions, and we talked a bit about measures of how you might go about doing that. But I think you need to think about that in terms of setting your table out for the future years. And in terms of reward-specific actions, delving deep beyond those numbers, these are some of the areas we always recommend that you focus on. Look at ad hoc increases. Don't just take what happened at the end of the year or what you've reported in your data set. Statistically, it's shown that more men than women get out-of-cycle pay increases. That may be something to do with the fact that men are more inclined to ask or not, but have a look at what's going on in your own organisation, along with looking at things like hiring salaries and promotional increases, looking at salary recommendations and how far people are being moved into the pay ranges when you're going through your pay review processes. A bit like the point we looked at with Hugo Boss, look at the KPIs or the measures in your bonus or your incentive schemes. Is there any inherent bias involved in those? So we work with a lot of law firms, and for many years their bonuses included a factor for billable hours. That can have gender bias built into it because it assumes that you can be present at work to work those additional hours. And we are seeing law firms moving now more towards introducing some form of discretionary element into their bonuses to counteract that. Think about the gender analysis and the gender impact when you're doing your budget modelling. So we know that quite a few companies allocated portions of their pay budgets during their year-end review to address this. So, when you're doing your budget modelling, think ahead and think about that. Do I need to set aside money to help me address some key areas that need to be focused on? And then the last point is around, consider the inherent gender bias in market data. It's rather ironic that market data, particularly in the US, can be used as a material factor in an equal pay claim. But actually, if you think about market data and what that market data is based on, it's based on real people, on real salaries, where in the UK, we know we've got an average pay increase of 18.4% or 14.3%. So we really have to question ourselves, is there gender bias built into that market data as well? And I've talked to a number of the market data providers, about what they're doing about this. This is definitely on their radar. They're looking at what they can do to try and help you by reducing that factor. So I'm going to finish there, Patrick, and just leave 3 key points, I guess, as you go into your 2018-19 reporting, which is, think about making sure your numbers are accurate and consistent, be authentic, and set out your action plan. Because people, I think, this year will judge you more on what you've said you're going to do about your numbers than your numbers. Okay, thank you very much.